Hello and welcome to today's daily education brought to you by Forex.Academy. My name is Richard and I'm more than happy to take you through today's daily education video, which is actually all about market consolidation. Okay, without further ado then, if I could draw your attention to our disclaimer currently up on screen, and please do take the time to familiarize yourself with the risks involved in trading these markets. Okay, so like I alluded, the focus of this very brief daily education video is market consolidation. So without further ado then, let's go through a couple of points in terms of what market consolidation is. And when price consolidates, it actually effectively relates to price congestion in a market. So it's that sort of congestion of prices over a particular period of time is what indicates that these markets are consolidating. Now, consolidation is often around very, very well-defined levels in the market. So there's ways in which, and I'll show you very shortly what I mean, but there's ways in which you can identify these very, very easy to identify levels. Consolidation often creates what's called order stuffing from the institutional perspective. So literally you get this congestion again of market prices and market orders. And in retail trading environments, we refer to it as range trading. So providing opportunities within a particular range of two clearly defined and distinct prices. Now, generally speaking, the longer the price consolidation, the higher probability of what's called a breakout opportunity. And that's when we get a clearly defined breakout of a particular level, which perhaps has been consolidating for a period of time. And when we get a breakout of those levels, whether it's to the upside or to the downside, what it indicates to us as traders is the market is looking to head in that direction. Also, it's important to be aware of the stop loss exposure effect. And that just basically means those that trade ranges. So if you happen to sell the high of a particular range and you place your stop loss above that high, which is ordinarily what most of the retail market would do, then that stop loss is very much exposed in that market. So sometimes these markets can be manipulated to the effect where you can get prices pushed to take your stop loss out of these markets. So there is, I suppose, an element of risk necessarily associated with trading consolidation. And if your stop loss is exposed and it gets taken out, and it's often referred to as a false breakout as well. So if you experience a false breakout, it doesn't mean necessarily your analysis is incorrect. All it means is you've literally had your stop loss exposed. And finally, it can provide you with many different trading opportunities, both actually during the period of consolidation, but also actually after and beyond. So let's have a look at this on a price chart. So we currently have the crude oil chart currently up on screen. So I hope you can see that. And what I'd like to draw your attention to are the four levels that we can see currently up on screen. So we can see that this market has made a bit of a high and has bounced back to what is effectively price number one. And we keep getting these opportunities to break higher and keep failing. So what that does to us as traders is it identifies this high up here as the top end of a range. And then this market makes these series of additional lows. And again, you can see that this market really fails to break above this particular level here. And this just happens to be the crude oil market on a daily time frame until something significant happens at this area in here. And that's really what we focus on, because the price action within this square is very different to what we've seen previously. So we can actually see what's called a period of consolidation over a long period of time. We're talking about December right the way through to March. So we're talking about a 4-month period where we get this consolidation and we get a congestion of prices. But when we get a breakout at point number 4, you can see that the market starts to move in that direction. So we ask ourselves always when we get a breakout like this is, what is the effect of price consolidation? Well, a couple of the points that we need to take on board is that we're no longer interested in moving to the upside. So that can now be eliminated from your trading choices. So now we're looking for opportunities to sell. Of course, breakout traders would look to capitalize on this move and maybe even get involved in a bit of trading to the downside. But let's follow this through in a little bit more detail. So we are looking for opportunities to sell. And you might look at this chart, and let me take this off just briefly. You might look at this chart, you might identify a really good opportunity to sell this market inside that square on screen. And look what happens. The market makes a low, we start to bounce off that low, and it creates a double bottom. So now all of a sudden the market starts to reverse. And then when we get to this little location here, you know, what are we thinking as traders? Now we've experienced a period of consolidation, this congestion of prices over a period of time, and we get our answer, which is our breakout to the downside. So we are looking to sell this market to the downside. But the market, as you can see, decides to double back. Now, if we move this price action on a little bit, and there's a really good lesson to be learned here, that just because you get the initial price move and then you get the reversal, like most traders, certainly on the retail side, as this market is pulling back to these levels, they'd probably stop looking at it and go elsewhere. Whereas what this particular breakout suggests to traders is that we are in a market which is looking to move to the downside, because we've been in a prolonged period of consolidation over a long period of time, and we get that breakout move. But we don't necessarily, maybe we've taken a small winner, maybe we've mitigated risk pretty quickly, and maybe even taken a small loser. But as this market is reversing, it's effectively pulling back to make a lower high. So if we understand our understanding of trend analysis, it's simply a series of lower highs followed by lower lows. And you can see how, if we run this on, how many opportunities it can give you for a technical trader on the back of what is a breakout of a period of price consolidation. So, and therein lies the potential opportunities for traders. So not only do they get the initial breakout trade, maybe make some profit on that trade, as you can see, it consolidates and it bounces back a little bit, and then we get these really long extensions. So all we're doing is following through from the initial breakout in line with the market movement. So that's why ultimately price consolidation is so important to technical traders. Okay, so that just effectively concludes this lesson. So the opportunities that price consolidation can present, it can give. And if I take you just back, just very, very briefly, if we take a step back, it can give range-bound traders the opportunities to actually sell at these levels on multiple occasions because you've identified it as a level of resistance. And this is what we've got to be careful. Like if you happen to place your stop loss just above this level, you can get these little spikes that just take you out of those trades. It doesn't necessarily mean, if you get a reversal, it doesn't necessarily mean that this market is interested in moving to the upside. In fact, it's the opposite. We actually get those opportunities to continue to sell this market. So it provides traders with some fantastic opportunities to actually trade the range, which is of real importance. And then, of course, you get your breakout traders looking for the bigger moves to the downside. The longer the consolidation, normally the bigger the move. Okay, so that just about concludes this particular webinar on price consolidation. So all that's left for me to do now is to thank you very much for joining us. Do take care, and we look forward to seeing you next time. For everyone here, bye for now.